Hello and welcome to News Hour on Souk News, reaching you live from Lagos, Nigeria. Coming up, Nigeria plans $2 billion investment for nationwide fiber optic expansion. Lagos governor secures COP28 financing for key waste projects. Donors embrace anticipatory action at COP28 amid funding concerns. Global air cargo witnesses robust growth of 3.8% in October. Thank you for tuning in. I'm Adesua Iromoseli. We begin in Nigeria. In a bid to revolutionize communication services in Nigeria, the Minister of Communications, Innovation and Digital Economy, Bosun Tijani, has unveiled plans for a $2 billion investment to extend the construction of fiber optic cables nationwide. In collaboration with the Nigerian Communication Commission, he outlined fiber optics as a priority to bridge communication gaps. Although the federal government has already laid 35,000 kilometers of fiber optics, Tijani stressed the need for an additional 60,000 kilometers for complete nationwide coverage. Expressing his commitment, the minister highlighted the potential impact on service quality and announced plans to secure private funding in the next 6 to 12 months. Furthermore, Tijani addressed the infrastructural development of the 5G network across Nigeria. Acknowledging its existence, he emphasized the necessity for widespread infrastructure support to avoid discrepancies in service quality. The Lagos State Governor Babajide Sanwo-Olu has disclosed a significant achievement for Lagos State as he successfully secured financing deal at COP28 for 2 pivotal waste projects. He made this known during an event at the Nigerian Pavilion on Sunday, sharing that these waste sector initiatives have reached a crucial stage, awaiting technical reviews from interest investors and the subsequent disbursement of funds to propel the transformative ideals into reality. Governor Sanwo-Olu emphasized that the successful execution of these waste projects would not only alleviate the current challenges faced by the state in waste management, but also transform the burden into a unique opportunity. This strategic initiative aims to redefine the narrative surrounding waste management, positioning the state for a more sustainable and advantageous future. To address the challenges faced by taxpayers in the country, the chairman of the Federal Inland Revenue Service, Zak Adedeji, has granted a complete waiver on accumulated penalties and interests. This measure aims to alleviate the burden on companies who have struggled to fulfill their tax obligations within the set timelines as stipulated in tax laws. The announcement, which was signed by Adedeji and made public by his special advisor on media, Dare Adekombi, emphasized the recognition of the difficulties faced by taxpayers in settling their outstanding tax liabilities. Moving on, the Nigerian Upstream Petroleum and Regulatory Commission says the federal government is considering the revocation of unused oil exploration lease granted to companies that have failed to conduct exploration activities on them. The Chief Executive Officer of the Commission, Gbenga Komolafe, noted that in accordance with the Petroleum Industry Act, PIA, the focus is on delivering value for the nation, and only companies with both technical and financial viability will retain their leases. Komolafe emphasized that reviews of these leases will be initiated and the awarding of new leases will be contingent on specific terms and conditions. Recent data from the Commission indicates that over 60% of the prospecting licenses issued to local and foreign oil firms have expired, while 33 licenses have lapsed and not been renewed, including 4 under contract disputes. Away from that, in a positive turn of events for Nigeria's economic landscape, the official foreign exchange market witnessed a notable upswing in dollar liquidity on Tuesday. This surge played a key role in fortifying the naira, which saw a commendable 3.71% gain. Data from the FMDQ revealed that the dollar was quoted at 806.73 naira, a marked improvement from 837.77 naira recorded just a day prior at the autonomous foreign exchange market. This development was underpinned by a substantial 92.92% increase in dollar supply as the daily FX market turnover soared from $73.93 million on Monday to an impressive $142.63 million on Tuesday. Despite the boost in liquidity, shades in the market were evident, with the bid rate for the dollar reported at 1,150 naira, marginally weaker than the 1,021 naira quoted the day before. Notably, the spot trading segment reflected a lower bid rate of 757 naira per dollar, down from 701 naira per dollar on Monday, showcasing the dynamic nature of the current market. And now the chairman of the Nigerians in Diaspora Commission, NIDCOM, Abike Dabiri Erewa, has advocated for enhanced investment collaboration between Nigerians in the diaspora and their home country. This appeal was made at the Avenue Impact Winner Ball in London, an event for diaspora project professionals. Dabiri Erewa emphasized NIDCOM's initiatives and encouraged diasporans to engage in programs such as the Diaspora Mortgage Scheme and the Diaspora Investment Summit, designed to facilitate investments across various sectors. She highlighted the Diaspora Mortgage Scheme, enabling individuals to secure a mortgage of 60 million naira from the Federal Mortgage Bank of Nigeria, allowing them to own homes in Nigeria independently. Dabiri Erewa also discussed the Diaspora Investment Summit and the Diaspora Investment Trust Fund, urging collaboration to pool resources for positive impact. We'll take a breather now and return with more stories. Stay with us.
Hi, my name is Fred Amata, and you are on to Souk News.
If you are watching this channel for the first time, make sure you continue to watch it, because this is Souk News.
Shout out to Souk News. Actually, I don't know. I really enjoyed the little moment I spent with you, and I think with more of this.
Souk News. Here's the Souk News, who had the courage to transcend a locked off camera and actually have a conversation with a human being. It's a pleasure, Souk News.
Thank you for staying tuned, and don't forget to connect with us on our diverse social media platforms. Away from Nigeria, at the COP28 in Dubai, a historic moment was marked with the launch of the first ever Climate Relief, Recovery and Peace Declaration. The declaration is a set of policy and financing goal aims to enhance climate programming in conflict zones and was hosted by the United Arab Emirates. COP28 received a widespread praise for focusing on conflict and fragility policies, potentially signaling a paradigm shift in humanitarian development and peace efforts. The declaration further got endorsements from 74 governments, including major players like the EU, the United States, China, Somalia, and Yemen. While celebrated for its emphasis on conflict-affected countries, concerns were raised about the lack of concrete financing. The declaration's success hinges on the commitment of high-income polluted countries to redirect existing funds to fragile and conflict contexts, raising questions about accountability and follow-up mechanisms. Also, COP28 Humanitarian Day saw a renewed focus on anticipatory action, with various donors and institutions announcing initiatives to build climate resilience. European Commissioner for Crisis Management Janez Lanazic committed 80 million euros for disaster preparedness, while Britain pledged up to 15% of its 1 billion euros humanitarian budget for resilience and adaptation. Germany and Norway also expressed support for anticipatory action, emphasizing the need for a mindset shift among donors. However, concerns were voiced about the potential for anticipatory action to become a buzzword, with worries that it might not lead to a substantial reform or effectively empower the global south. In a welcome development for the aviation sector, the International Air Transport Association reports a significant surge in air cargo volumes across Africa, the Middle East, and Asia for the third consecutive month. After a challenging 17-month slump, this uptick in demand signals a positive momentum in the global air cargo market. The latest data reveals a 3.8% increase in global air cargo demand for October, showcasing robust year-on-year growth. While this positive trajectory positions the industry for a stronger conclusion in 2023, caution is advised as demand still lags by 2.4% behind pre-pandemic levels. IATA's Director General Willie Walsh acknowledged the encouraging signs, but emphasizes the need for a balanced outlook due to lingering uncertainty in the global economy. And now in Africa, South Africa's trade minister has revealed plans for the country's automotive industry to start producing its first electric vehicle in 2026, marking a significant step in the green transport transition. The move aligns with the Just Energy Transition Plan, which aims to create a low-carbon and climate-resilient economy. The JET plan estimates that an investment of $6.84 billion would be needed from 2023 to 2027 to make the transport sector a significant contributor to South Africa's decarbonization goal. With global automotive giants like Toyota, Isuzu, Volkswagen, and Mercedes already operating in South Africa, the country is well positioned as a manufacturing hub. In another development, the British Universal Bank Barclays has witnessed a decline in its shares during early Tuesday trading as Qatar Holding, one of the bank's major shareholders, moved to digest approximately 510 million euros of its stock, marking a reduction in its crisis-era investment in the bank. The sale was expected to be priced at 141 pence per share, reflecting a discount of around 1.4% to Barclays' closing share price on Monday, but the exact percent size of the stake sold could not be immediately determined. Barclays, which is currently undergoing a strategic overhaul to reduce costs and revitalize its share price, saw its stock fall up to 4.5% in early trading. The move comes as Barclays, under CEO Venkatan Krishnan, is working on plans to save up to 1 billion euros, potentially involving the elimination of around 2,000 jobs, particularly in the back office. The bank is also in the process of selling its consumer finance unit in Germany and contemplating the sale of a stake in its domestic merchant service business. And lastly, on the inaugural day of China's new visa-free policy, which allows passport holders from France, Germany, Italy, the Netherlands, Spain, and Malaysia to enter the country without a visa. About 2,029 international visitors entered China through this channel. The trial period, lasting from December 1, 2023 to November 30, 2024, permits citizens from these countries to enter China for purposes like business, tourism, and visiting friends without a visa, with a maximum stay of 15 days. The relaxed policy has already resulted in a notable 12.54% increase in the inbound visitors from the designated countries. By waiving visa fees and associated costs, China aims to not only facilitate tourism and business travels, but also promote mutual understanding and beneficial relationships as the world becomes more interconnected. And that's a wrap on News Hour. I'm Adesua Iramosele. Thank you for watching.